Good morning, everybody. I hope that you can hear us and see us correctly. I see that there are more and more people joining. So very happy that you are joining our session today. Just a couple of words of introduction before we start and give the floor to our wonderful guests today. Well, first of all, it's already day 3 of our banking risk and regulatory event. During the last 2 days, we had the opportunity to discuss regulatory updates that are planned for the upcoming future. And on day 2, we deep dive on the BCBS 239 regulation and data-driven supervision. Today, we are going to focus on AML strategies and the developments in the AML space. Basically, we observed that in the European Union, we have a huge change in the AML connected with 2 very important events. So first of all, we have in place right now the AML package consisting of the directive and the AML regulation. But the second thing is quite unique because we also have the first opportunity to have pan-European regulator, AMLA, which is set and working. We have a couple of first publications issued by AMLA starting from this year. So we will be able to speak in more details. What does it mean for us? What does it mean for financial institutions? But before going to that, let me just say that there are a few housekeeping rules for today. First of all, there is a Q&A box at the bottom of the Zoom that you are seeing. Feel free to use that to ask questions regarding our session, regarding our discussion. Basically, it's a way to communicate with us. We'll try to be interactive. Secondly, the chat section will also be useful for you if you want to comment, if you want to just say hello. Basically, feel free to do this. Thirdly, there will be a poll questions during the second part of our presentation, during the second part of the event. Those poll questions will try to be organized also to let us understand how well you feel prepared, what challenges in this on this road you find. So basically, those questions will come in the second part of our presentation today. And last point, the whole session will be recorded, and basically, if you have a feeling that there is something interesting you want to get back to, basically it will be available shortly after the event at the Deloitte website. So feel free to reach out and, let's say, investigate. Let me introduce myself first. Paweł Spławski. I'm leading financial crime team from Warsaw, Poland, but also trying to coordinate our activities in Central Europe. But what is even more important, I have today with us 2 wonderful guests. First of all, Krisztina Nagy from our Hungarian office and Matthias. I will give them space to introduce. Krisztina, handing over to you.
Yes, good morning, everybody. My name is Krisztina S-Nagy. What I do is I help banks transform their operations. I tend to focus on 2 things, risks and regulation. And that explains why AML is in my focus currently, right? The risks are rising on this topic. The regulations, as we will see, are definitely on the rise on this topic. So yes, that's what I do. I work with global banks. I work with local banks. So understanding the challenges of both.
Thank you very much. Matthias, short introduction from your side.
Sure, thanks, Paweł. Matthias Rode. I'm actually based in Frankfurt. I'm in the financial crime space already for the last 18 years. So I've seen a lot of interesting developments. I'll talk about that in a bit. I'm here, and thanks. I'm here in my role as the lead partner and coordinator of all AMLA activities across Europe for Deloitte.
Thank you very much. And actually, our session today will be divided into 2 parts. First of all, I will give the floor to Matthias to cover the recent developments and the stage of organization for AMLA. And after this presentation, we will go into discussion with our guests. So Matthias, handing over to you.
Thank you very much. Again, thanks for having me. I'd like to use the next 10 minutes to quickly give an intro into AMLA, what we see, what we think is important, and then moving into the question and answer session. So next slide, please. Firstly, maybe a quick timeline. I mean, for the ones that are already in the market in AML for a long time, discussions around aligning AML regulation was happening like for the last 10, 15 years. A lot of discussions here, but in 22, 23, it actually picked up speed. And in 23, it was decided it will happen. 24, AMLA was legally established. Mid-25, operations started in Frankfurt with the first hirings and with an office establishment. And in the beginning of 26, with already 130 people on board, AMLA issued their new strategic planning document for 26 to 28 that really highlights where they are going now with this single rule book and the technology that's coming with it. And the two big pieces of a strategic planning document that I think personally are very important, you see on your left and in the middle. You have the strategic goals. I'd like to highlight two things. The convergence, it's a very important thing. All the discussions talk around we need to have the 27 EU countries aligned and in one single way of working. And the other thing, and this is also extremely important and pretty much a new thing, is technology and innovation. There's a heavy focus on that. I will get to that a bit later. It is something that we have not seen over the last 10, 15 years. They also have highlighted digital roadmap and what they talk about, the data ecosystem, and the main priorities there, state-of-the-art solutions. Can talk about what that means. Take over Eureka and FIUNet, you probably all know about that, and positioning the AMLA as a data and AI hub. And what that exactly means, we'll talk about that a bit later. But you see very ambitious goals. And for the moment, we can say also what we observed over the last 12 months, not just very ambitious goals stated, but also a lot of activities around it to make it happen. So they're taking it very serious. Next slide, please. I just mentioned AMLA in a nutshell, basically two topics. You have the supervision piece, which is the one single rule book, and with it, the supervision. You have the direct supervision of the so-called AMLA 40 institutions. You have indirect supervisions in the financial sector. And for the moment, oversight of non-financials. In the financial sector, just to give you a hint what that means, we're talking 160,000 obliged entities. And even deducting solicitors and lawyers, we're still talking roughly 120,000 obliged entities across Europe. So it's an immense number, it's a huge number. But I think that so far what we've seen, it can be done the way that AMLA is preparing to do that supervision. On the right side, you see the coordination and the oversight of the data mechanisms, I call it, and the FIUs. Eureka, I mentioned FIUNet, but there is more data that they want to exchange across 27 countries and make sure that there's transparency and an even level for everyone to have data and insights. Next slide, please. In terms of timeline, we're in 26, so you see that mid-26 you will have a couple of deadlines. What's more important from my perspective, mid-26 you will see a first big dump of RTSs from AMLA. We're thinking between like 60 to 80. And from 26 to mid-27 you will see most likely all the RTS that AMLA will be in charge of released in the market. So it's of utmost importance, and this is something I will talk about in a moment again. It's of utmost importance to monitor what's happening this year and next year and run a kind of an agile monitoring for AML to understand what all those RTS mean and how to approach them. 28, 29 on the right side, not very well detailed yet, but we know that the plan is to go online somewhere 28 or 29, depending on how the resources are available. But the direct supervision will start with the 40 institutions, but also some additional indirect supervision. And what we do see already is that for 27, 28, AMLA is already planning to join on-site inspections and the joint supervisory teams of ECB. Next slide, please. So one thing that I would also like to highlight, it's a rather complex thing that the European Union took on here. We have the AMLA itself as an agency with EU-wide standards and all the guidance around it. We also have technology culture. We have the ECB, we have EBA, we have EOBA. We have a lot of agencies involved. We can already see that most of those agencies in terms of AML and other topics, including fraud, are talking to each other very extensively. We see that some national legislations are already starting to align to what's supposedly the new European benchmark. And we have the different packages. Some of them are already in implementation, some of them coming up. So you see a lot of interaction, a lot of alignment and coordination already. And as I just mentioned, it would be advisable from our perspective to have also on a client side, have a small team or have a function available that is in an agile state monitoring those activities, because we already see a lot of bits and pieces coming out that give a very interesting and very good orientation how things go forward. And maybe also with this slide, I'd like to say, apart from all the regulatory challenges that AMLA poses, we also consider AMLA and everything that's currently happening around AMLA and ECB a huge opportunity and a huge positive development for clients that they can use. And just as one example, a lot of supervisory bodies in countries in the past were very inflexible in terms of new technology. AMLA is the total opposite. It's pushing new technology, it's setting boundaries, but those boundaries are way more flexible than in the past in many countries. And so I think apart from, as I said, the regulatory challenges, one should also consider it a huge opportunity and a possibility to really realign operating models, technology, and policies. Next slide, please. So some challenges I highlighted here for you, resource and prioritization pressures. One thing that I would really like to highlight, I do that in every single speech or discussion I have, data. One of the pushes that already started in 24 by supervisory bodies is to clean up data, to address bad data, and to highlight that the data availability is really a key part of regulatory requirements going forward. We also see system and process updates that will need to be required. BaFin in Germany just recently issued their strategy document for this year. Apart from that, AMLA is again a focus point. We also see that there is a lot of focus on system resilience and system reliability. And that focus on systems and data again links into the overall push to have a more data-driven approach. The overall preparation timeline is challenging. I mentioned before, ongoing monitoring is required and quick reactions to what's coming up, because you will have many things happening in parallel in this year and next year. One thing that's also worth highlighting is it's a risk-based approach that AMLA is taking, much more than the rule-based approach in the past, but there is still a lot of prescriptive balance that needs to be taken into account. The last 2 points, harmonization, national specifics. This is something we're observing very closely, because some countries are very close to what we believe will be the benchmark. There are other countries that are far away from that benchmark that we believe will be guiding AMLA. And so some countries will need to uplift their local regulation more while other countries are probably in a more comfortable position to need to do less. Last but not least, KYC onboarding. There's a remote identification shift. Most of you have probably heard about IDAS and new solutions, and there's other couple of topics coming up in the next 2 years that will most likely have a heavy impact on KYC and the way it's done, apart from the overall AMLA regulations. Next slide, please. So just wrapping up my little overview and run through AMLA, our key takeaways. I mean, one thing that is clear is there will be one single rule book. I mean, the 27 countries that have different approaches, they will just all be merged into one single rule book. And for me, I personally believe that is a huge opportunity for clients to also consolidate their own internal approaches, because the single rule book as a guiding principle will really help to align, standardize, and streamline processes. And Krisztina will talk about that in a bit. As I just mentioned, strong focus on data exchange and analytics. A lot of the obliged entities in the past, we know they're still running a lot of their activities on Excel. AMLA is very clear. Excel is not a tool of choice going forward. It's not a tool of choice for anyone. And if you get on-site visits, you will see that in the future, there will be this focus on data and on systems. And I don't think it will be very wise to rely on Excel going forward, because there will be additional opportunities to do reporting and to do analytics. This is all extremely challenging with modern systems. With Excel, you will fail. Inherent assumption of tech. I'm not so sure that AI is really a requirement over the next couple of years in terms of efficiency. And again, Krisztina mentioned that already. In terms of efficiency, maybe, but I wouldn't start with that. I would start with data and some basics before I go into the more sophisticated topics. But there will be flexibility, and AMLA, as I mentioned, is more flexible in terms of boundaries when you experiment with new situations and new ways of working. Uplift of weaker local regulations. All countries that have a supervisor that in the past was very laissez-faire and very relaxed about AML, they will obviously have a rude awakening, because we assume that very likely the supervision of AMLA will be comparable to the SSM supervision that was introduced in the early 2010s. And we also see a lot of discussion and alignment around that. So countries that are already used to a very tough regulatory approach, they're probably again not feeling a huge difference. But in some countries we know, and you can read FATF reports, that some countries were not very strong and tough on that regulation and supervision in the past. They will see a huge difference. And last but not least, you will see stronger enforcement, and you will see much higher fines than many countries have imposed in the past. That is very clear. So that's for me, again, regulatory wrap up, a quick in a nutshell view on AMLA. There's much happening. I believe crucial years are this year and next year in terms of understanding what the details are and how all things connect. But just reiterating, focus on data, focus on real good systems will definitely help already preparing for whatever is coming in the next 12 to 18 months. And with this, back to Paweł.
Yes, thank you very much for guiding us through, let's say, what was published, but also through the plan. Let me mention before we go into the discussion one point. So basically, we were surveying financial institutions across Europe, how advanced they are in terms of implementation of the requirements of the AML package. Over here on the slide, we have the QR code to the report. The report is pan-European, so basically it was covering 20 European countries. We had over 120 participants from more than 100 financial institutions. So majority of the countries are quite well covered, and basically we shared the summary report in the autumn last year. But as this information was collected almost 9 months ago, because we surveyed the institutions in the summertime. I believe it's also worth to understand where you, as our audience, are in terms of advancement of the implementation of the AML package. So basically, the questions which we will have today, and the poll questions, are similar to the ones that we used for the report. And on the other hand, it will allow us to compare, what changed over this 9 months, and basically observe how the situation is developing from your side. Matthias, once again, thank you very much for guiding us through the plan of AMLA and the publications. I think one question as the opening one from my side is connected to this direct supervision for 40 institutions and indirect supervision for the rest of the market, because I believe a lot was said about that. But first of all, please remind us, how those 40 institutions is going to be selected, when it's going to be communicated, who will be supervised directly. And on the other hand, perhaps even more important for majority of the financial institutions is how others may be affected. I mean, how this indirect control, indirect supervision will be exercised. What does it mean, basically?
Yeah. Two parts. I mean, the AMLA 40, as we call it, this is not 100% clear yet. EBA was working in 25 on a new risk assessment framework and also on a kind of basic data framework. They basically issued guidance on both. So data is available, 200 fields that they expect as a minimum to be available, plus also already a lot of guidance on risk assessment. And as we know, and most likely some of the institutions that are participating today, AMLA already reached out to collect data. We believe it's roughly 130 institutions in Europe that they approached for data collection, and that data will most likely be going through that risk assessment that they set up. And then in an ideal world, the top 40 will be the AMLA 40. Is that really the case? Overall, we all know Europe, and there will most likely be also some other factors that will influence that decision. But overall, the basic guidance on how the 40 will be selected is based on the EBA risk assessment framework and the data that they're currently collecting. So that's the AMLA 40. They will obviously get a very special focus, for sure. But also the others, they will not be left out. So it's not that 40 will get AMLA supervision very tough. The others will feel it in a similar way, because AMLA is planning together with ECB to also join other local supervisory processes. How exactly they will do that and how much they will give in terms of freedom to local supervisory authorities, we don't know. I mean, this is something that still needs to be negotiated. Our guess is that, and again, we take FITF reports as a base, that they will focus on countries that were not really in the top 20 in the FITF reporting for Europe in the past. So there will be more focus on the weaker, let's call it this, on the weaker countries, and less focus on the countries that are already pretty good and pretty well established in terms of the new benchmark. But you will see, for sure, you will see also local enforcement, but you will see your local supervisory authorities to also up the game and be tougher. And in terms of reporting, the reporting will be aligned based on the single rulebook. So in countries that have been rather relaxed about reporting in the past, you will see more reporting requirements, you will see more complexity in terms of reporting. So there's a lot of things that you will see. However, I think it's something I would say we see much clearer in 27 when AMLA aligned more with ECB and the supervisory bodies in the countries to see how they will go about it. And we are expecting some more guidance there in 27.
But if I may, have just follow-up question. If I understood correctly what you were sharing during the presentation, there is also a plan for the joint inspections between AMLA and ECB. And, from my perspective, this will be a kind of a game changer because so far, of course, we have single supervision from ECB. We have the inspections from ECB. On the other hand, right now, joint inspections will be a different level of focus on AML, at least from my perspective. Do you have any thoughts and remarks on that?
Yes, I do. I mean, for some institutions, maybe also some that are already here in this discussion, ECB already started collecting and asking questions about AML in the past. So there was already a lot of interest, even though they didn't have an official mandate. They will not have the official mandate in the future, but they will have AMLA on board for sure. And I would expect in the next couple of days announcements. Some of you probably know there is a letter of a memorandum of understanding of the cooperation of ECB and AMLA. That's already in place. It's available publicly. So there is a clear statement. AMLA and ECB want to cooperate. The framework for risk assessment of AMLA is called the SREP, the AMLA SREP. For the ones that are familiar with the ECB SREP, it's probably a very funny coincidence that they're both frameworks are called SREP. We also see with EBA, there is a clear statement. There is an expectation that there will be joint supervision. There will be joint audits. How they pick the institutions, who knows? But just to put it in perspective again, AMLA will have a target headcount of 450 people for 160,000 obliged entities. It's clear that AMLA cannot do it alone. At the same time, we know that ECB over the last couple of years built up a lot of resources to do more supervision and be very hands-on. So in all likelihood, with the operating, with the memorandum of understanding, you will see a tilt to the more stricter and tougher ECB approach, and you will see joint audits. That's at least my guess. How it works out, again, I said it before, how it works out, that we will see in 27, 28. But I would definitely prepare for more of an ECB-like approach.
Okay, thank you very much. And actually, before going further, I promised that we will try to be interactive. We have one interesting question from the audience. Let me try to rephrase that, and it will be good to answer this question before we focus on the poll question. So the question from the audience was referring to plans and focus of AMLA in the nearest future. Is there a focus on certain type of financial services models, for example, retail banking, more than others? So basically, is anything known to us already?
Yeah, we do already know. I mean, obviously, the focus of AMLA is more on banking. Banking institutions will get more attention than insurance and asset managers. That's at least for the moment. There's a clear tilt towards banking. Insurances will have a focus on KYC because other topics are not that important, but KYC will also be important there. So there will be more like a theme topic focus in the insurance space. Asset managers are less of a worry for AMLA right now. I mean, AMLA basically focuses on the banking due to the risk. That's pretty obvious because there is more risk in banking than in insurance and asset management. But that could change. I mean, for the moment, they're more like industry focused, but it could also focus more on topics, on different pieces of the overall process chain that will later receive more attention, like, for instance, KYC across the different industry pieces of financial services. But for the moment, it's clearly banking.
Yes, and what I read indeed from the documents published, basically the focus will be driven by the risk assessment of certain activities. But overall, I have not seen anything about different parts of banking activities being more or less, let's say, under the supervisory focus.
Yeah.
So thanks a lot for commenting that. We have the first poll question. I hope that you can see this one. Actually, I would say it's a warm-up question. It's basically, just to test whether everything is working technically. but also to start with, let's say, this dialogue with you. We just wanted to understand whether you already started the preparations for, the upcoming changes. So basically, question is open. I hope we'll have the information regarding the results soon, and just after that, yes, we do. So what we have over here, 74% of the people in the audience already started the preparation, 26 not yet. I think one difference in comparison to the report which we have published in the autumn. Actually, the results back then from the autumn was quite positive, because majority of the institutions, vast majority, actually it was 85%, have started the preparations. So basically, over here we may have a slightly different population that in the question poll, but basically, yes, majority of you, I understand, start to think. So let me jump directly to the second poll question and ask you, so what's your assessment of, let's say, the preparation status? Where you are on this road, how far did you get so far? And again, sharing what was defined last year, basically, it was quite equally split between 3 stages. First stage, we are still defining our approach, so very initial preparation status. Second stage, we have an initial strategy, so it also collected 1/3 more or less of the responses. And third, we have high-level roadmap. This is basically where institutions were those 9 months ago. Let's wait a minute for the result from the poll over here. I wondered whether you as participants moved in this process. So once the responses are ready, once we have the majority, please pop it up to our screens. Yes, so what we see over here, we are still defining our approach, 37%, so slightly higher number than we observed last year. We have initial strategy, 28, very close to what we've seen last year. We have a high-level roadmap, this is 12%, and one more response that is quite popular over here. We have detailed project plan and clear design. That's quite, I would say, impressive. 17% of the responses, meaning that we are moving on in this way, and it's a good information, definitely, to have for the rest of the questions. So moving on with, let's say, the questions, let me jump, Krisztina, to you right now, because, when I'm trying to speak with the clients, they raise one point, and I wonder, what's your perception on that? So basically, institutions that I had the opportunity to speak with are raising the point that the whole reform is actually bringing or may bring, let's say, the more cost pressure. I'm not talking about the regulatory fines, but basically the element connected to expenses to implement the whole change. But on the other hand, after this implementation, there is also a worry that there will be an efficiency concern, that basically this element of compliance will be constantly more expensive from the financial institutions P&L perspective. I wonder what is your thought about, what's your comment that you have observed in the past, and also how to best prepare for that, because honestly, costs and efficiency concern is nothing to just simply observe. we still have the way to either counteract or to prepare better. How to do this?
Yeah, yeah. And I think the most important thing that efficiency is not a concern, is the source of competitive advantage in any money laundering.
Good point.
And many years ago, a chief client officer told me that, Krisztina, this AML thing is like looking for a needle in a haystack, right? It's a very nice metaphor. And with risks rising and regulation becoming tougher, effectiveness is non-negotiable. So the needles in the haystack need to be found, right? The upcoming RTSs and ITSs will calibrate this expectation. How many needles need to be found of all of them that are there. So we know that, there's tolerance levels around this, but we know that they have to be found. And Matthias, you talked about more stringent supervision, higher fines, right? So when we think about cost efficiency, IT cost or operating cost is a cost, but fines are also a cost. So that's something to consider. But this is about effectiveness, right? Finding the needles in the haystack. And then there's the question, how efficiently do you find the needles in the haystack? And my view is that if banks are not efficient, they will not find it. So it's not that they will find it in an expensive way, they will not be found. So that's why I'm saying efficiency is the source of the solution in AML. And what drives efficiency, fully agree with what was said before, data, good quality data, models and analytics, and an IT architecture that supports this. So that's what's needed for efficiency. And I have a lot of sympathy for banks, right? Because this might mean large investments into data architecture and IT infrastructure and analytics upfront. However, I do believe it's worth it. And just linking back to the second survey question, if it was me in that multiple or single choice test with the multiple choices, I would be saying all of the above, because the AMLA expectations and the AML regulation can only be addressed in an agile manner, right? So nobody can afford to have a waterfall transformation project where we first work out the design and then we implement it. Ideally, and many clients of mine have started, ideally, work has already started, and the good place to start it is with data. And later on, as regulation becomes refined, things will need to be refined. But there's no time to wait. It needs to commence now.
Okay, thanks a lot. Thank you very much. And those elements connected to data, but also to analytics, we spoke about that. Matthias, you mentioned that during, let's say, the initial presentation, because this is not only the challenge for the institutions, but I understand also the tangible plan for AMLA. Can you elaborate a little bit more about those elements connected to ICT vision from AMLA perspective, also the technological changes which are planned over there?
Yeah, I think the good news is for all that participate here, AMLA, and that's very for me also very personally very positive point. AMLA understands the development of the technology side, and they understand more hands on more hands and more people hired to do more topics on the regulatory front. It's not going to work. It's not going to work because the needle in the haystack that Krisztina just mentioned, you're not going to find it with more hands. You find it with the right data and the right technology. And the technology, it wasn't there 10, 15 years ago. It's there now. It is definitely there. We've seen it. We know it works. It's not as expensive as it used to be like 15 years ago. So AMLA is really emphasizing technology for obliged entities. Start with it, get your data straight, connect your different data silos, make sure you have your visibility on your data, and make sure that you're ready to also report it to us, because we would like to know too. share data, and make sure that you really run the right analytics tools to really identify your topics, and not with hands and not with Excel. Just to emphasize those two things again. So the strategy there, and this is why I mentioned it in my slides, the strategy paper, the planning paper, explicitly highlights their own desire to be a data hub, to be a data platform.
Okay.
But at the same time, they are emphasizing in their strategy, they want to support clients in moving away from 70s, 80s, 90s systems to modern technology and run those properly. And they're explicitly mentioning advanced analytics, machine learning. They're also talking about AI again. I mean, AI is probably the 10th step in a process. And again, something that Krisztina mentioned. I mean, you cannot just wrap it all in one strategy and then just implement it, because things will happen on the go over the next couple of years. But something you can start with is make sure that you do have more advanced analytics functionality. Make sure that if you're running your operations in more than one location, that you can see what's in those different locations. Because in the past, I mean, I've seen clients that are on 6 locations and they have KYC data of the very same client in 6 different ways. How is that possible? How can you have not a single vision on a client, but this very same client has got 6 different data setups in 6 different locations? This is something AMLA will ask you. If you show data in the future that you're onboarding clients in different locations in different ways, it's not going to work. So their ICT, their strategy is very clear. They're encouraging their obliged entities, they're encouraging financial institutions to adopt modern technology and within the data.
Mm-hmm. So if I may do just two comments over here. First of all, regarding advanced analytics and machine learning. Honestly, we did a research of practices of the European regulators across at least the European Union. What was the approach for the, let's say, use of machine learning for AML purposes? And honestly, we received real variety of answers. Some of them, let's say, with pretty good definitions what is possible, provided by BaFin. Some of them, let's say, individually set and discussed with certain institutions, like, for example, with the French or Belgian regulator, but also some of them still hesitating to approve such technology. So I will for sure keep the fingers crossed for that, because this will be, let's say, a move forward, I believe, for quite many institutions. And on the other hand, machine learning, at least for the transaction monitoring space, is with us for a longer time already. We are having, those discussions. What I wanted to do is to invite you also for tomorrow. Tomorrow we'll be focusing this time on Gen AI. And basically tomorrow we'll also try to provide the examples of technology advancements for the KYC area that I believe is less common. So I will have the pleasure to show more, but also Gen AI for me is a huge, let's say, opportunity for process improvement and also process efficiency building, because this is more or less what Krisztina, you said, an element of just simply cost basis and cost advantage for individual institutions. So thank you for that one. Yes, one more topic that I believe was in this initial presentation quite interesting, but let's go deeper into that. We spoke about, let's say, the approach to AML controls quite similar, like for any other risk area taken by ECB. Krisztina, you have broad experience in, let's say, risk management and observing those ECB requirements. What do you think about that? What do you think about the idea of combining AML requirements, practices with broader risk management expectations and practices?
I really believe in that. That is a fruitful approach, and there's many good practices in risk management to draw upon. There's one big difference though, compared to other types of risks, and that's the speed of risk, right? So if you compare AML to a traditional credit risk that works in an annual cycle or even longer economic cycles, right? New types of financial crime related risks, they arise very quickly and materialize very quickly. So banks and institutions, they need to be very agile. And Paweł, answering your questions, there's really three things that banks need and can borrow from the risk management world. The first one is data, and Matthias, you spoke a lot about data. I fully agree. And let's not forget that how much work has been done on BCBS 239, yesterday's webinar, on data definitions, dictionaries, master data management, lineage, and so on, data quality. So there's nothing new here, but this approach, it needs to be applied for AML as well. The second point is model risk management, right? So in the ECB world, in the risk management world, model risk has been a big topic, right? So whenever we use models, they are prone to errors. They solve problems, but they can introduce new problems as well. And what we need to see here is that AML-related models, may they be traditional rule-based models or AI-related models, they need to be validated, monitored in the same way. They need to be governed just like any other risk model. And as if we go to the West, if we look at the UK and the Bank of England, I think there's a big recognition that financial crime models matter just as much as credit risk ones, but not in every geo. If we look to the East, this recognition has been done. And within that, AI models, of course, they deserve their own specific attention, right? We're going to have a separate webinar specifically on AI. So absolutely, I can see the question coming in that that's a high risk use. True. AI, I believe, is still needed, and fully agree it needs to be handled with care. So that's important. And then the third area is technology, right? And AML technology is not new, but it needs to be upgraded, right? And there's the element of the various rule-based engines. There's the element of the workflow. So what Matthias described is that there cannot be a bank, with the same client having different risk ratings in every country and, the information not linked together. So workflow, however trivial it is, it does need good technology to support it. And there, I think on this third topic, there's a bit less good practices in risk management. So technology and AML technology, I'm afraid banks, they do need to pioneer that one. But the other two, there's lots of inspiration.
Mm-hmm. Thank you very much.
Sorry, Paweł, and if I can add,
Go ahead.
Tina said, one thing, when we talk AI, AMLA is not expecting you to replace all your current systems with AI. It's augmentation.
Yeah.
In the core, your systems will remain exactly the same. They have to be up to standards for sure, but they remain the same because we're talking cost, and you don't want to replace everything with AI and drive your cost through the roof. You want to augment it in a smart way so that you can improve your current core systems. You can obviously also replace them, but I would recommend against it because in terms of cost, it makes more sense to use a good old system that is up to speed with modern requirements. And one quick answer to one other question that was posted here: what about data that is that's hidden on purpose? And that's the same as with the EU AI Act, the data privacy across Europe. And what AMLA is supposed to achieve, there are contradictions. I mean, the EU wouldn't be the EU if there wouldn't be loads of contradictions. So there is no answer for everything, and especially for data privacy, for hidden data that should not leave a country. There is no clear answer yet, because unfortunately, AMLA will have a single rule book, but data privacy laws still remain local laws in every single country. And they are not, unfortunately, they are not very compatible in certain ways. So we're expecting answers there in 26, 27, because we know there's a dedicated working group that is taking care of how to deal with hidden or with privacy data and data that might not go across borders. Just that to add to what Krisztina said.
Thank you very much, and thank you very much for addressing the question, because this was exactly what I intended to do. So thanks that you started to reply for that, even without having this point raised. But I fully agree that we have a huge challenge to be solved. We have two big regulatory package in the EU. One is GDPR, the other one is AML. At least over here in Poland, we have discussions. So which one should prevail, how to combine the requirements of both. I also keep the fingers crossed in this regard for AMLA, because we really need to have those responses. Okay, so we have one more poll question, and let me ask our supporting team to put it on the screen. Yes. Thank you very much. This is actually a multiple choice question referring to the areas that you find the most time consuming or the most hard to address. Actually, what we observed again in the report published in the autumn last year, there were a couple of elements that were most challenging, or where institutions expected the highest level of complication. And those three most challenging some time ago was indicated as client data gathering and actualization process as the first one. The second one, KYC connected to onboarding, event-driven review, periodic review, and the changes in KYC area, and the third one connected with innovation. So I'm really curious what will be the result that we will observe today. Are we ready with the responses? Can we put them on the screen? Yes, and what we have over here, we have the highest results for client data gathering. So similarly to what we observed last autumn, we have, I think, second highest result for transaction monitoring. That's interesting point. We haven't observed that a couple months ago. Let me look farther, but farther we have two competitive responses, being first of all KYC, and secondly use of tooling and technology. So very, very interesting responses. Thank you very much for that. And I see that we have one more question from the audience, and before the closing remarks, we may try to address that. So this question refers to, let me rephrase. Given the extensive operational, technological, and governance changes required under AMLA, does Deloitte consider the July 2027 implementation deadline feasible for reporting entities? Additionally, what major challenges or bottlenecks should institutions anticipate during this transition period? Anybody would like to take this question first?
Look, I think it has to happen, right? However, there's a level of uncertainty in new regulation being introduced always, right? That supervisory and regulatory timescales sometimes slip. ITSs and RTSs sometimes slip. And sometimes implementations get postponed. We've seen this with so many things, with IFRS 9, with Basel 4. So we don't have a crystal ball. We don't know what's going to happen. I believe what is important is to prepare and work, to focus on no regrets work. So focus on the basics. As Matthias said, data is a very important point. Technology is a very important point. AI is a very exciting new efficiency increasing lever, but that's augmentation, right? So I would start with the basics, do the no regrets work, so that if the deadline does stay how it is, you are prepared. And yes, it could be that some of the RTSs and ITSs come out even later than expected. This wouldn't be the first time, and this wouldn't be the last time.
Yeah, thank you very much. If I may comment, saying what I would say to big financial institution client, 2007 July date, we don't know whether it will be postponed, honestly. We observed such situation in the past, but we do not have any indication for the time being. So for the time being, I believe we should start preparing on one hand. On the other hand, the most important element and the most time-consuming element for majority of the large financial institutions is connected to technology and planning technology changes. And honestly, right now we have the last moment to plan that, because I usually assume more or less 1 year for implementation of, let's say, the changes. And this time is coming soon in July 26 to have 1 year before go live. So this is the second point. Third point, also very important, we may expect changes over time on this road, unfortunately. And we need to allow ourselves to have a buffer for that, that we will be on one hand working, but on the other hand, changes may come. In the meantime, the best example is for me connected to draft LTSs regarding CDD. It was published before by EBA. Right now it was published for the public consultation again regarding AMLA. The scope of data which is required over there is not the same. It's not changed a lot, but basically there are some changes in the data scope. So from that perspective, it's better to prepare for more and limit later on. But on the other hand, we will most probably have only one chance to start with the implementation. Any remarks from your perspective? Yes.
First remark, I agree with everything Krisztina and you said, Paweł. I mean, don't see really big issues there. I wouldn't bet on a slippage in timeline. That's I think that would be not a good idea. It's not early. It's already time is already of the essence. What we already said, set it up in an agile way. It's better not to do stop and go based on different things that come up, but have a consistent approach, like smaller teams, but consistent, ongoing over the next 2 or 3 years, an ongoing approach to whatever is coming the way in terms of regulation technology, but also operating model. And the last thing I would highlight again, I mean, apart from all the regulation and all the challenges and the data privacy and the AI Act and GDPR and all the other fancy EU regulations, overall, I still believe of what I've seen the last 15 years that AMLA for the first time gives a positive outlook. It gives the real opportunity to consolidate, reduce the cost, streamline, use AI. They're really giving the opportunity for clients to really do something different this time with AML and most likely going forward AFC and then going forward non-financial risk. And I believe they mean it. They really mean it. So an active engagement with supervisors, talking to them. I mean, there was an earlier question around AI monitoring models. We just half a year ago negotiated for the very first time with BaFin for a financial institution to allow monitoring, parts of monitoring with AI. That would have been impossible 5 years ago. So there is a kind of a positive attitude also from a regulatory side, from the EU side, from the supervision side, from the ECB side, to really do something different. And
I would really emphasize that should be used by whomever is affected by what's coming. And I guess that's all of us here. But it's positive. There is an opportunity in the next 2 or 3 years to really use that flexibility to really rethink operating model, cost, the way it's approached. Do I really have the right systems? And yeah, use that opportunity rather than waiting for the next regulation to hit and then not knowing how to deal with it.
Thank you very much, Matthias. I would treat, your statements. I believe they are very good as a closing remarks for our session. For all participants, thank you very much for today. The recording will be available shortly on our webpage. I hope we'll stay in touch.
Thank you.
Thank you. Have a good day.